Big banks and Bitcoin making news today. I'm Lisa Bernhard with Reuters, and I'm joined by Joy Yang of MarketVector Indexes. Joy, the big banks unofficially kicked off earnings season today with some mixed results, making headlines. Citigroup announcing layoffs of some 20,000 employees over the next couple of years. Talk us through what the bank reported.
Yeah, so big news right off the bat from Citigroup. 20,000 layoffs, that's big news. That's a lot of people. But, this has been a disappointing quarter for Citigroup, mostly because it had a high exposure to emerging markets like Russia, Argentina, and some significant reorganization. So those really impacted write-offs, as well as, all the costs. So we're looking at, a bank going into a cost-cutting phase at the moment.
Yeah, 10% of its workforce, 20,000 workers. All right. Also, we had JP Morgan Chase, we had Wells Fargo, and we had Bank of America reporting today. What jumped out to you in their earnings reports?
I mean, surprisingly to me, JP Morgan, which has been a stellar, bank to watch, reported disappointing earnings. So again, it took some one-off write-off fees for some of the failed banks that it had to rescue last year. But on the back of it, it also reported strong revenue growth, and that's mainly across the banks. We saw that banks had record net income profits because they were lagging the rates they were charging on deposits versus the rate they were charging on loans. That you can't really, that's not going to last very long. So, similar across the banks, strong revenues, maybe a lot of issues with costs, and a very cautious outlook for 2024, because we know that in competitive markets, these banks are going to have to adjust their deposit rates because, depositors have been sticky, but they're not going to stick around if they can get better interest rates somewhere else.
Let's switch gears now and talk about Bitcoin, because we are in day 2 of trading of the new Bitcoin spot ETFs just approved. What are we seeing so far?
Okay, so I mean, this has been an exciting week for Bitcoin and ETFs in general. And so we saw finally the SEC approve spot Bitcoin ETFs. And we had 11 issuers come out with a spot Bitcoin ETF right off the bat. So we saw heavy trading. It was reported like over $4 billion dollars in trading volume, and that's huge, right? So, there was a lot of trading going on. There is a lot of net inflow going on, and there's a lot of media attention. So this is, for me, even though we had all of these focus on the Bitcoin ETFs, the price of Bitcoin actually ended up marginally down over, this week and over the trading day of the initial ETF launch. And that for me is an indication a lot of the expectations of this approval had already been factored in. But also, it's also very much like an IPO where you have a lot of stakeholders that are looking to sell their positions, and many of these Bitcoin existing holders have been holding on to their positions for a while, waiting for this news announcement. So, it's a slow build because once this ETF door is open, we know that, new investors will come letting in. And the ETF market itself is a $11 trillion industry. So, just to take, few percentage of that share in that market is going to be pretty significant.
Joy, before I let you go, I want to talk about some economic data that was out today, and that was the numbers on wholesale prices. And we saw that wholesale prices actually tick down a bit, and this is coming a day after we saw consumer prices tick up. So why the difference there?
Yeah, so I mean, to me, these two are tracking different. One is tracking consumer prices, one is tracking producer prices, and there's a lag in, these prices as well as how often these data are accumulated and reported. I didn't see a significant difference when you look underneath the numbers, and you take out some of the more volatile prices. And, for me, the markets reflected the way that the markets reflected, showed that, there wasn't a complete, big surprise in these numbers. And we saw that the expectations is still pretty strong for rate cuts in March 2024. So there's some alignment despite kind of this, volatile or small volatility over the week. But I think investors are still pretty optimistic on heading towards first quarter 2024 rate cuts.